Hello, everybody. I hope you're having a wonderful week. I'm going to try a little bit of something different here, a little bit of a different format. Again, as I always must say, guys, this is not financial advice. Do your own due diligence, do your own research, come to your own conclusions, and trade accordingly. I'm just another guy on the internet, like my dear old friend Tom Nash likes to say. Now, let's get into it right away. So if you guys have been following my previous videos, you know exactly what these lines are. Why are they there? We have been riding this trend since 2016-ish, since we moved over from 2015 to 2016, roughly around there. We landed on this trend, have been testing it all along. Really, the only time we have properly detached from the trend was during COVID, the first drawdown, and of course when the Fed started giving out stimulus checks and basically, in other words, printing money. Um, Buying bonds and such. Of course, so this was the actual rally that we had back then, and that was the only time we detached from that trend, as you can see. Now, regarding the Fibonacci retracement levels, just to kind of reference that because I have been asked about that. Yes, I have two Fibonacci retracements. One of them is short term. That's the one you see from during the trend that COVID created, essentially, because it's a full concise trend from A to B, from beginning to end, and we can measure it and see what the potential retracement of it is. And that is something I've heard people complaining and saying, how come we didn't fall perfectly into the golden pocket, which is this area? And we actually retraced 50% on that entire trend. You can actually see almost perfectly. That is where we had potentially the head of the inverted head and shoulders pattern that I've been talking about for quite a while. And the second, more colorful Fibonacci retracement that you can see actually is the one since 2009, 2008. This is when we had the big crisis, the housing bubble crisis. So two different Fibonacci retracements, and I'm using those to find the right levels. Now, if you pay attention to the colorful one, which is the longer term, we barely slipped into the golden pocket. You can see right here, we haven't even dropped into its 50% and actually started correcting. Okay. Now, if you have been following my previous videos, you know exactly what I've been expecting towards the end of the year. So to summarize, and I'm sorry if I've delayed you too long. So yeah, I do expect for the market to reach 4,500 before the end of the year. In fact, I'm gonna give you a little bit of a surprise for those who survived that long and actually are watching. I expect the market to exceed these areas. First of all, like I've mentioned before, and my expectations were, if you watch previous videos, was for us to cross that gap that we have been stuck with since August, really, last year. I expect that gap to be closed relatively soon. Um, and deriving from other technical indicators I use, I have came to the conclusion that we are going to reach 4,500 by the end of the year. It's not going to be a straightforward process. As you can see, originally I showed how the market, the price action inevitably makes a move, has to do a correction, a retest, just like we've been testing that line, basically hitting that diagonal resistance all along. Then we crossed it off. We started crossing it off after we successfully actually broke through. And I've said we're going to be hugging that line, even though it's going to be moving downwards and we will be moving along with it. We are finally free to go and actually start the correction. Again, that does rely on the on the fact that the world will not come to an end, and Russia-Ukraine situation will not get exacerbated. The oil issues right now will not get any worse. We are dependent on relatively stable economy in order to proceed in that direction. Again, if anything for if any force majeure will occur and will interfere, there might be changes. If that will not be the case, we will proceed on this course and probably will reach the 4,500 by the end of the year, as I've expected. And in fact, a little tidbit, and I'll probably explain in the future videos, why do I expect the market to even to exceed that. That's actually, I expect the market to arrive at 4,600. It's, if I'm not mistaken, right now it's 4,618 dollars by the end of the year. You will not see it on the chart right now. I'll explain it in a future video. But I am also relying on the Fed to increase another 25 basis points on the upcoming interest rate hike. And I am expecting the CPI to come in at around 5.6, and yes, maybe even 5.5. So if our CPI print will come in at 5.5 and the Fed will increase by 25 basis points more, we will be at a situation where our interest rate is at 5.25, which was our original terminal rate. It was determined by the Fed. They have implied around Jackson Hole. You can look back, and they Jerome Powell have actually given some hints that it might that the terminal rate will have to be increased, and we might see areas of the 6%. Although I'm actually I was always skeptical if we'll have to go that far. Right now, with the situation as is, I'm actually doubting they'll have to go that far, but I am certain we'll have to go 25 more basis points, hence giving us 525 on the interest rate side. And of course, the CPI, as I said, if we come in with a print of 5.5 or 5.6, we're basically one hike or one CPI print from these two elements meeting. And that will have a big implication on the sentiment of the market. Okay, so with that in mind, I do believe the market can and will, and again, that's not all I'm relying on. Obviously, I'm relying on technical factors that I'm not gonna go in depth here. I will be more than glad to speak about some of the tools I use on Tom Nash's community. You can find Tom Nash on Patreon. I am the main admin there, and I do participate in, probably 99.9% of the Zoom calls, and it's a great community. We discuss stocks, cryptocurrencies, the overall market, the sentiment, psychology, pretty much anything that you can think of. If it's on the investment side, if it's short-term trading, if it's options trading, we got it all there. I highly recommend the community. And of course, we also make some fun. We have some jokes, and we just, talk about random topics like philosophy and whatever the hell it comes up to mind. So you're all more than invited to join. It does cost $5 a month, but I assure you it's worth it. Now, with that in mind, guys, the only thing I'll ask of you is to press the like button, subscribe if you like the sort of information I'm giving here, so you'll be notified whenever I'm releasing a new video. And, likes are free, so I'll appreciate it if you'll do me that huge gesture and actually smash the like button. With that in mind, guys, have a wonderful rest of the weekend, and I hope you all make lots of money on the market. Bye-bye.